I thought you got in early today so you could cut up a video of you number one at Croatia and then cutting in together with you being at Game 7 of the Stanley Cup Finals, watching our Panthers bring it home.
That was a highlight of my life, I've got to say.
Good for you. I'm glad you went.
I talked to my neighbor. My neighbor did not go. He was very upset that he did not go. He didn't think his wife would allow him to go. And I said, but can you put a price on happiness?
Yeah, I mean, apparently you can. Whatever that ticket cost was.
I said, wouldn't you want you to be happy? He said, yes, but I don't know what that number is.
Not to take it for granted, but man, poor Edmonton. They'll be back. Connor McDavid's so good.
Yeah, they got a good team. It was pretty close. So a highlight of my trip, I got a story to share real fast that
Hit
is
us.
kind of interesting. In Slovenia, we went to a Slovenian dinner and show. So they gave us
Okay.
traditional Slovenian food, which was some meat and some traditional wine from Slovenia and other stuff. And after we get through the main course, they want to play a game with everyone that they typically do when they all get together. And it's called the hat game. And the hat game is a bunch of people are in a circle together, okay? And you're all got your left hand on the person's around the person's waist next to you, and your right hand is on the person's head to the right of you. Everyone's got a hat on their head.
Okay.
So the game is, as the music starts, you take your right hand with the hat from the person's head next to you and place it on your hat. And then they keep doing that again and again and again. Head, hat, head, head, so forth and so forth. And you go faster and faster, and eventually someone's either too slow, where they have two hats on their head at the same time, or they don't put it on their head and it falls off, or whatever the case may be, and you eliminate that person until this circle gets smaller and smaller.
Okay.
So I was there with about eight. I don't know if they were Dutch or German or Austrian. I mean, they had some funny accents, but we didn't really talk much. But eight people to start, all guys. I get down to
Oh, I
the
was gonna ask you if it
I
man,
get down to the finals. I participated. I really wanted to play this game. I was excited. Get down to the finals. It's me and one other guy. He's like
how does
6 foot.
that work? You just keep doing it to each other?
Yeah, keep doing it to each other.
But are your neck you can't be next to each
Now,
other.
at that point, you're across.
Okay.
And they make it more challenging at the end because when the music plays, not only do you do the hat, but you've got to start rotating around.
Okay.
The problem is this guy's like 6'5".
I was
So
gonna
it's
ask how
already
tall
a
is this dude?
challenge.
Yeah.
So I try to duck down to be like make it harder for him to have to reach my head. But second try, trying to reach up there and grab it over, I missed the head and it fell behind me and I lost.
Are
I said,
you allowed to
oh,
dodge? Because
huh?
you said you move, so you can move
Move.
like your body. You're allowed to make it hard for people to put it on your head or
Well, it's
take it.
multiple things are happening at once, so it's not easy to remember everything at the same time. But
Wow,
yeah,
that's
you can make it a
hilarious.
little bit. No one was doing that because I tell you, the guys I were with, they were horrible. We couldn't get one round of passing the hat before somebody messed up and passed it the wrong way or didn't pass it. And it's like, it's one move, hat, 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 again and again. Like, it's not that challenging.
That's hilarious.
So I
The
got to this
Slovenian hat game. So you got a
finals.
silver medal. Okay.
What's new in your life that you want to talk about?
Nothing. I unfortunately, first thing I did to get ready for this recording was look at Walgreens stock price. It's not good. Not good. It's very bad.
Nothing like a late rally to just seize the day at the very end of the year, huh?
Yeah. Yeah.
Do we think
Walgreens
any
sees retail
any
customers
listener
being more cautious about their discretionary spending. I guess Walgreens is the only place people aren't spending money because they're spending money everywhere else.
Do we think any listener or viewer actually bought Walgreens on behalf of your recommendation? I hope not.
God, I hope not. But look, man, after you get chopped in half, it's humbling.
Half? Whoa.
Yes, sir.
So there'll be a dog of the Dow again come next year.
Yeah, I might just have to roll it. I might have to.
Double or nothing?
Yeah.
Welcome to episode 58 on June 27th, 2024. We are back. I'm back from vacation. Marcos has worked the entire month of June. I feel bad for you. Maybe you got some vacation in your future. But let's talk about money market funds. I got an email from a reporter recently saying are more clients keeping their money in cash, money market funds, CDs, short-term treasuries, things like that? And the answer is not only for our clients, yes, but for the entire world, yes. There is now a record $6.12 trillion in money market funds. That does not include things like short-term treasuries and CDs. That's a massive number. So we're going to talk about that. Why are people doing it? What are the pros and cons? And what are they missing by doing such a thing?
That's so much money. So much money.
So I think the reason they're doing it are a few things. Rates are about 5.25 to 5.5 on a money market, the highest it's been in about 15, 20 years. So obviously you put the money there, it's safe, you can access it whenever you want. There's a lot of concern about the election coming up in November. I don't know why. We've seen both presidents in action, 4 years for Trump, 3.5 years for Biden. Both of them have had great market rallies during their time as presidents. Trump, during his term, the S&P was up 67%, and Biden so far up 46% in 3.5 years. So you've seen them already. The market seemed to do just fine while they were president.
They've been A/B tested. We'll see who ends up winning the whole thing. Everyone gives too much credit and too much blame to the presidents for market performance.
Yep.
But
as we can see, Trump beat Biden, so he's a better president, I think. That's what we can.
Yeah. As long as we don't get Herbert Hoover again.
Is he still alive?
I don't think so. But the Great Depression was rough. and Herb was right there for it.
Well, not having a Federal Reserve, that didn't help either. Not having someone that knew how to play with interest rates and put stimulus out there, that didn't help.
Yeah, all the Securities Acts came after Herbert. That is a fact. Yes.
Other reasons that people talk about geopolitical tension that's out there, but I feel like we've had that for our whole lives, whether it was Afghanistan, Iraq, Israel, Russia. It's just part of life. And it seems like it hasn't really affected too much in terms of how the markets have done and how people are spending their money. But that's always pointed out too.
Yeah. During Harry Truman's day, 1945 to 1953, $100 turned into $252 at the end of his presidency. And some things happened during Truman's presidency.
Well, that's just like the old quote, war is good because the economy then spends a lot of money to fix things after that. Right? Like I don't want a World War II.
Okay, fine. But annualized inflation was 5.4% during his tenure, and we still got positive performance. Let's go,
Again,
baby.
I'd rather not have World War II and not have the positive performance.
I know, I get it. It's no fun. He had 2 recessions.
And then last thing is that people look at bonds and how they performed. Bonds have been lackluster, especially in 2022, worst bond market ever. We talked about that. They've come back, but not nearly as fast or not nearly as well as people have expected. So those are all the reasons that I can see why people are keeping their money in money markets and short-term CDs, treasuries. Anything you want to add there?
Look, I think people are holding a lot of cash. How much of that cash should be invested in the market, their portfolios, right, that are kind of looking for growth beyond 5 years? I have no idea. It's not 100% of that money. And I think all that we encourage is having no more in cash than is necessary. Maybe having a little bit more of a safety margin is reasonable. But tell me I'm wrong here. I think from a planning perspective, we always suggest people have a safety margin. And if your safety margin needs to be a little bit higher because that's where your comfort level is, I don't care if that's paying you 5% or 1%, just have it.
Yeah, no, that makes total sense. And clients that need it for the next year, got it. You got a tax bill coming in April, you want to buy a CD that matures or treasury in March, go for it. But when you have clients that roll over CDs and treasuries and money market again and again and again, it's like this is not for emergency cash. And
Yeah,
those
no,
money market rates are taxable. They're ordinary income. That's one of the problems. And great, 5.25 looks so great in the rearview mirror. You probably feel good about yourself. But going forward, it's not going to be 5.25.
no, it's not. And then I think everyone also does the kind of looking at your neighbor's balance sheet and reading the headline of this hedge fund manager thinks short-term bonds are the move because you're getting paid to sit there. But why the hell are you comparing yourself to a hedge fund manager? You think that guy or that gal's playing the same game as you? Come on now.
Well, I don't think the hedge fund manager would be very happy with 5% when inflation is 3 point something, right? You're not
Well,
getting
yeah,
that
but
far.
they're sitting in cash and also doing some put straddle call
Right.
and buying oil futures in Taiwan. But all the readers see is Short-term cash good, says super intelligent hedge fund investor.
Well, yeah, they see short-term cash good, and then they say to me, the next comment is, well, when rates come down, obviously that's going to happen at some point. We know this. Then I'm going to go and buy the bonds and the stocks and so forth.
Yeah, we'll talk about neutral rates soon. But yeah, that's a point of conversation.
So what's the problem there? What is someone not thinking about when they say, well, I'm going to wait for rates to come down and then do that?
Well, it's going to be too late. You're trying to time rates.
It's too late.
Yeah.
So number one, we've seen markets have already moved higher just with the expectation of rates coming down. Forget the fact that rates haven't even come down yet from the Federal Reserve. Markets have already screamed higher at that point. So if you had in money market versus stocks, you're way behind being in money market versus being in stocks. Two, we already know that when bond rates come down, bond prices go up. So by the time you switch over, you'll have missed that rally in bonds. And third thing, once rates come down, then you can't lock your money into long-term bonds. So, I show a chart here that has different rates for CDs and treasuries. And we had this conversation before the episode, but getting 5.25 may seem great because it's one of the highest rates on this chart. But would I rather lock my money in for 30 years and get 4.5% or get a little bit more if I owned a corporate bond or municipal bond than locking in for 5.25 for a week? Like, that's such short-sighted thinking.
It's timing the bond market. That's all it is. It's
So
timing the bond market.
I made the analogy, if you had to, when the rates were super low and everyone locked in their mortgages, and both of us on this call got super low, below 3% fixed rate mortgages for 30 years. Would we have rather taken the 2.25% variable rate instead of the 2.5 or 2.7% fixed rate? No, no one
Of
did
course
that.
not. Of course not. But again, I'll go back to the time period, 30 years. And I know maybe do you buy a bond at 4.5? What was the 30-year trading at?
Treasury was 4.5, but if you got a municipal corporate, you're probably even higher than that, right?
Yeah, if you get a corporate, it's 5. You get like a just investment grade 5.5. So yeah, do that for 30 years. That
Lock it
doesn't sound
in.
terrible.
Lock it in. Everyone's just looking at just the next week or the next month and not thinking about like these rates are not going to be around that much longer. We've gotten lucky that they haven't gone down yet in the last few months when the Fed said they would, and now they've sort of pulled back because inflation was a little bit higher in the first half of the year. They're going to come down, and that 5.25 is going to be gone forever. Maybe not forever, for a long time, our lifetime.
Where's the next 1% interest rate move? Is it up or down?
It's down in 2025.
Okay, well, you heard it here first. I have no idea when it's going to be because I'm not that guy like you, Mr. Predictions.
This is
Let's
what we
not
do.
talk
We
about
predict.
Walgreens.
Make the prediction.
No, I
This
think
year,
it's
next year. It's a flip of a
directional.
coin.
The directional move should be down, right? That makes sense, which means you want duration. And then again, you're going to be too late.
The viewers want to know, Marcos, 2024 or 2025?
For what?
The next rate cut.
Gosh, I'm a 25 guy.
Okay, we're in the same boat.
I'm a 25 guy. That's it.
But rates are
Yeah.
not going to come down that much, right? So you're going to talk about that.
No, yeah. Can I do that? Can I do my neutral right next?
Yeah.
So shout out to Apollo's chief something economics guy, Torsten Slok. He's been awesome. Last name's Slok. Google him and look at his stuff. It's good. This one is showing when the FOMC, the Federal Open Market Committee, puts out their economic projections, they have to put, okay, what do we think the neutral rate is? And the neutral rate is basically the fancy term for what's the level of interest rates that doesn't push the brakes on the economy or hit the gas on the economy. And what's happening to that rate? It's ticking up. Brett, why do you think it's ticking up? I'll tell you why I think it's ticking up. The globalization, energy transition, restrictions on immigration, more defense spending, and higher levels of government debt. What does that mean? I think it means a couple of things, but I think it means that random 2% inflation target, it's just random. And I don't think not hitting it matters. You already have a Fed funds rate. I think the effective is 5.3, and inflation is now what, 3 and change. So you have a Fed funds rate higher than the rate of inflation. And I don't think inflation's a problem anymore. And I think it's going to stay elevated for the next decade on a relative basis because of those kind of structural secular things that are happening.
Well, so what I hear from you saying is a couple of things. One, that while the neutral rate may go higher. It's still significantly lower than it is today. So we should expect a couple percentage points lower in the rates going forward, right? The reasons you
Yes.
gave all seem to make sense. But from an economic, from a confidence, from a presidential standpoint, I'm not sure people would agree with that because they've been so dialed into 2%. Like that's success, 2%. And if it's 2.5% or 3%, everyone's going, "Oh my gosh, this is awful."
Yeah, but
I
it's
agree with
random.
you. It's not. It
Like
is.
like viewer, hey listener, that 2% is random. Jerry Powell said it himself. It's random. That's it. It's just a random little target for us. And also, let me catch this in one thing. This is not my projection. This is the FOMC's, and those are also the people that expected the Fed funds rate to be half a basis point in June of 2022, and then it turned out to be 5. So, so they've been wrong before.
So don't put any money on that.
Yeah, no, thank you. But it's
And they're
fun
the
to
ones
look.
that got the best information, right? I mean, they see all the reports, thousands of data reports every single day, and yet they're still coming up with incorrect
Yeah,
assessments.
but look, and I just again, deglobalization is a thing, energy transition's a thing, immigration's a thing, more defense spending is a thing, higher level of government debts is a thing. Like those are not opinions. Those are things that are happening. And corporations, the things that are underlying all the markets, right? Owning businesses that are innovating and doing things are saying that they are focusing on those things. So those are not opinions, those are just facts. So in a market that's like that, you'd expect the neutral rate to be a little bit higher.
You know what else could contribute to that? People not working,
Nice transition.
right? Why? Because less people working means you got to raise your wages for people that are working. So shockingly, in the last few years, the percentage of Americans who are not working, who are older, has been ticking down and down and down. This is different than what happened in 08, 09, where people started to go back to work because all their accounts balances got destroyed and the financial plan didn't work anymore. But now they're leaving work. And so they're feeling good, they're feeling confident. But on the other hand, you got less workers, less economic growth, maybe more inflation in there, less Social Security coming in. There's a
I'm
lot
gonna
of negatives.
call, so look, I saw this chart, obviously, and I'm gonna call shenanigans. This doesn't make any sense to me. I think you drew this.
What?
Shenanigans. I think,
You don't believe the New York Fed, then? That's where it's from.
oh, damn right, I don't believe in New York Fed. Just like I don't believe the FOMC, but they put out good charts. That this is probably, these surveys, man, these surveys get me. The only surveys I like are the AAII bull bear ratio and the Michigan sentiment survey. That's it. And only in extremes. Everything else is baloney.
Okay,
I
well,
just don't, I think this is just people redefining what work is. And they are asking these people, hey, do you want to work in your same 9 to 5 that you don't like that much for longer? And they're saying, no, I'll go be an Uber driver, or I'll go start a business, or I'll go make some platform on top of Anthropic and OpenAI and sell a software to 12 people and I'll make a little bit of income.
okay, so how do you account for this statistic, which is not an opinion, this is a statistic? Participation among young workers is at the highest level since 2002, while for those over 55 is at the lowest point since 2007.
Your labor participation?
Yes.
Well, yeah, but isn't that because they retired because of COVID?
No, they're saying, well, that's part of it, yes, but you're saying that they're still working.
Yeah, it's just like less traditional work.
Then wouldn't that be picked up in labor participation?
I don't think so.
I don't know.
I don't know. Shenanigans on this chart, absolute shenanigans.
Hmm, okay. You don't believe your fellow Americans. Got it.
No, I'm never retiring.
I would make sure they're not on a jury pool then in front of you. That's who you're going to rely on to make sure that you're not guilty.
Why am I suddenly I'm facing a jury?
My fellow Americans.
Oh my God. Let's support your point, perhaps. I show you. Look at this next chart. Household net worth close to all-time highs.
It's
Man, I remember
surprising it's
back
not
in
at, isn't surprising it's not at all-time highs. Well, this is as a
I
percentage.
Yeah, I know. This is a percentage. That's why I like this
Right.
chart because it's not just household net worth. It's like it's got to be relative. That's like when you show the chart of credit card debt is so high. It's like so is GDP, dude. Like, yeah, GDP has never been higher. Duh.
Right.
Um,
Number of Americans have never been higher.
Yeah, so this just gives you as a percentage of disposable personal income, which I like. Um, I don't know how you can be negative with the consumer being as wonderful as they are. What is that peak? That was what? End of 21, maybe?
21, yeah. Early
Yeah.
22.
Man, those were the days, huh?
These are still pretty good days.
Those are the days. I just can't wait. I'm holding off on vacation until we get above 800.
Okay, good. We're gonna get a lot of productivity out of you, I think.
I know. So yeah, consumer's wonderful and unemployment's 4%. I don't know how you have any issues. Again, Americans are spending money everywhere except Walgreens. Um, the other piece, and this kind of plays into your earlier point about rates, this is money market funds paying an amount that is equivalent to 2.5% of annual consumer spending. So what's interesting here is you raise interest rates to stamp out growth, to slow things down, but what you end up kind of doing is making people feel a little wealthier because now all that cash is paying them 2.5% of what they spend.
Oh, for the half of the world that actually has, and I shouldn't say half, the small percentage that actually has wealth and actually has savings, yes, they're making more money. Well, I think we know
$500
that.
billion is not a little bit of money, right?
Well,
Yeah,
I know, but the 90% of the world who only has enough money to basically go paycheck to paycheck is probably not using a money market fund.
I
But
get it, dude. I get it. Now,
it's
what,
a
you trying to make
big
me feel
number and
bad?
it does help.
I eat all the food on my plate, okay, dude, buddy? I don't waste any food, okay? God, you're making me
Because
feel bad.
is someone starving in India, and if you don't eat that food, they're gonna starve.
What? That's what you're basically suggesting. That's what I'm hearing from you. Look, money market's paying a lot. I look at my Schwab account, I'm like, wow, I just paid for dinner by doing nothing.
Were you forced to eat vegetables as a child?
No, I wasn't forced because I love them. You know what I was? I was the guy at the lunch table who would ask people if they're gonna eat their vegetables, and I'd eat them.
No.
I swear to you.
Who brought vegetables into the lunchroom?
No, I would buy lunch at school, dude, in the little tray with the cutouts. You get your
And
pizza, and you get a
and
cup of something and like vegetable, like green beans or carrots or something or corn.
wow.
Come on,
You're
maybe they didn't have vegetables in Jersey. Come on, dude.
I
Public
don't
school
remember
lunch,
those.
public school kid until I
I
wasn't.
remember French fries or tater tots and chicken nuggets, but good for you.
Well, I like those things too. But yeah, I was a vegetable guy. So yes, 2.5% of annual consumer spending. This is kind of the duplicitous thing of higher rates. It stamps out growth. But once most Americans have a 30-year mortgage that's under 3%, oh my gosh, it's so wonderful. Um, what do higher rates do? Corporations locked in low rates, people locked in low rates. So what have your higher rates done? Just basically frozen the housing market. Thanks a lot.
I think
Thanks a
probably,
lot.
yeah, I mean, it's as we said, higher rates are good for some people, bad for others. Lower rates will be good for some people, bad for others. You can't get everybody happy.
No, but I would just like if you and me were happy, you know?
I'm happy.
Okay, fine. What else do you have? I have one more chart.
Go for it. Finish
S&P,
us off.
baby. S&P. And no, we're not talking about concentration. Today, Brett, we're going to do that classic reminder that we love to do. How far is the market supposed to fall every single year?
14%.
At least. If it doesn't happen, something weird is going on. How far has the market fallen at any one point this year? Only 5%. So, lady and gentlemen out there, just expect it to happen.
Debbie Downer. Leave with Debbie Downer.
No, I'm going to give you a formula, right? Do you remember the happiness formula?
Trust plus money equals happiness divided by respect.
You had to go algebraic, didn't you? No. Happiness equals expectations minus reality. And which one of those things do you control? Expectations. So we're the expectation setters. We've only fallen 5% this year. Expect 15 at some point because that's what happens. And then buy more.
I'm gonna buy me some rose-colored glasses to wear for next episode
You should, but like the hippie ones from the 60s.
because you're bringing us down. Thank you for
No,
that, though.
setting expectations. You're
Now, when
welcome.
it happens, we can say we knew it happened because Mark was told it was going to happen.
Expectations set. Be a buyer.
All right, let's see what happens. Have a
That's
good
it.
one. Bye.
Boom.